Hello and welcome to this December 20th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Acacia Technologies Group. This is ticker symbol ACTG. This is a little more than $900 million market cap company, so still considered a small cap. But the stock has done very well, as you can see from the chart here. Technically, volume started to come in back, actually even into June. We started to see a pickup in volume on this first move up. You can see we had some resistance just above $16. We made a huge move in late August to come back up and test this area again. And then you can see that from a technical perspective, some solid developments began to occur. Every time we pulled back, we held the 20-day moving average. You can see the 20-day moving average starting to rise with the price, the 50-day also coming up, and each time we moved up, you can see that the MACD followed suit, putting in higher highs along with higher price. So here was a push higher, the MACD rose. We settled down, we made another push to the upside, the MACD rose. We pulled back again to the 20-day moving average, and on the next push to the upside, the MACD once again rose. This tells us that the 12-day moving average continues to pull away from the 26-day moving average, showing that stocks got a lot of short-term positive momentum. When we pulled back and tested the 20-day in late November, however, and we bounced up again, two things I want to point out. Number one, you can see that the MACD was much lower. This is a sign that momentum is slowing even though prices are moving higher. And the second thing, look at the volume. Notice each one of these pushes to the upside came with some very, very nice volume on those moves. The last breakout in early December came with almost no volume to support the move. So the MACD was telling us that momentum was slowing, and the volume was telling us that momentum was slowing. And what we look for when we see a stock like this trading at $30, it tells us don't buy it here. Wait for at least a 50-day test. That's what we look for when we get negative divergences. And you can see here over the course of a little more than a week, we pulled back, we tested that 50-day moving average, and I think that the stock looks much better from a reward to risk standpoint now than it did obviously just a couple of weeks ago after seeing this $4 sell-off. Now to the downside, there's still room. We potentially could go below the 50. $24 is a very, very big support level. Anytime you get a breakaway gap or a continuation gap like this, where you have a big push to the upside and you get the heavy volume to confirm, normally the top side of gap support is your major support level. So I think that ACTG from the current level down to about $24 looks very interesting. I'd keep a stop below that $24 level, and ultimately I'd look for a retest up near $30. You can see also that during this selling, RSI has come down into the 40s. Normally during an uptrend, you'll see RSI hold in the 40 to 50 range. Normally in most uptrends, you don't see the RSI drop below 40. So it's going to be interesting to see whether or not this key support level holds. And then also stochastics, which for the last 2 or 3 months have spent most of their time up in the 80s and 90s. You can see now down at 14, so very oversold in the near term in terms of stochastics, hitting support in terms of the RSI. We've got the MACD getting close to the center line. 50-day moving average has been hit. This is what we consider a reset after slowing momentum, so we like ACTG here. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.